Hey guys, Akil Stokes here. Welcome back to another episode of the Midweek Markup. These are short and sweet videos that I do each and every Tuesday, showing you a technical setup that is on my radar, typically following up on something that we looked at in the weekend video or presenting to you something new that came on my radar today. Speaking of today, it's been a pretty active day in the market. We're coming off a US holiday on Monday, and as the trading resumed on Tuesday, we're seeing a lot of follow through from Friday's non-farms number. We're also seeing some new movement, especially on your Aussie and New Zealand pairs due to the monetary policy statements that were just released from them overnight or early this morning, depending on where you're at. So a lot of opportunities in the market, especially if you are a counter trend trader, as you can see in the bottom right hand screen of my my chart on the right side right here. But we're not going to focus on that. We're going to focus on a pattern opportunity that's here on the euro yen. This is going to be a pattern opportunity and a continuation opportunity. And what we have here is a potential advanced pattern formation. And before we get started on this, I want to take a look at the daily just so we have a larger point of reference. You can see price action is clearly diving back down to one of our VS1 levels, right? The VS1 levels are the red and green boxes that you see on your screen. They represent visual levels of structure support and resistance, one of the tools that we use to help us with our trading. If we can break this VS1 level down into a smaller level, the area which means the most to me is going to be the bottom area of this green candle, right? The area between the open of that candle and the extreme of the wick. That is going to be a zone that is very important to me. You can look left, you can see how important it was in the past as well. And the cool thing about this potential bat pattern as we go down to the 4-hour time frame is that it is set to complete right inside that zone. So if I just bring on my little cheating indicator tool, I should say, that I use to draw out patterns, right? We're going to see an X to A as our initial swing low to swing high. An A to B is going to be our first retracement. A B to C is going to be our second retracement. And we're projecting that our D completion completes down at 130.34. And that completion zone is going to go all the way down to the end of the red box. So this is going to be called a bullish bat pattern. You can see the risk reward is pretty decent on this, almost a 2-to-1 risk reward ratio, meaning that your potential profit is almost 2 times the amount of the risk that you're taking. One of the reasons I like bat patterns so much is because you consistently get a much better risk reward in comparison to some of the other advanced pattern formations like butterflies or Gartleys and ciphers, but obviously it all depends on the specifics of how you trade them. Everyone can trade them a little bit differently. Now, this is a two-part analysis, right? It's not just the bat pattern, but it's also looking at the move that we can see in advance of the bat pattern. So as we dove down here, what we did was we violated our B leg. Our B leg represents a previous level of structure support. And now we can go back to that IPDE process, right? Identify, predict, decide, execute, and tell ourselves we identify a lower low, lower close. We can predict that price is likely to continue lower. We already have a target point for where we think price is going to go if we do continue lower. So another opportunity that we can look to take advantage of, and this is going to be for an intraday trader or a day trader, is the move to the completion of the pattern. So asking ourselves the question, is there any way, or if the market gives us a little bit of relief, right? So let's say a retracement up into our previous level of support, which should now act as resistance. Is there a way I can take advantage of this pullback and then trade it on the way down in anticipation of this bat pattern happening? And that is something that you can look for here on the 60-minute time frame. We spoke to this to our day traders this morning as well. If you look at a range bar chart, and these are some of my favorite charts to trade because you get, they're not time-based, they're movement-based, and you get some more wiggles, right? You can actually identify smaller levels of structure that you can take advantage of. So, for example, if we're looking for a pullback here in the daily, on the 60-minute chart, we're probably not interested until we get back up to 131.26s, right? At a minimum, right? Previous level of structure. However, here on a range bar chart, again, this is going to be more for day traders, right? You can see that we're going to have levels of structure that come prior to that. So right now we had a nice little low and tight flag right here before breaking down to the downside. If we get a pullback into that level, right, this could potentially be a reason for entry as well, where we have stops right above it because we don't want to be too wrong. If we're wrong, we want to be in and out, right? We want to lose, right? Lose small, gain big. And we can anticipate running this down or trading this all the way down to, again, that 130. My box is still on here from this morning. That 130, I would say 130, 32s, 34, somewhere around there, that level. And you can see if you can get something like that as a day trader, again, you are going to take some risk. It's a very aggressive play, but look how much your potential reward outweighs your potential risk, right? And you'll take these all day, every day, twice on Sundays, if the markets were open on Sundays. It's a saying. It's not Forex specific, but you guys get what I'm saying. So that's what we're looking at here on Euro Yen. Let me know if you have any questions or comments. Leave them in the comments section below. Also, if you haven't done so already, we got some cool free training available on our website. Check it out. It's called The Truth About Forex Trading. It's a 4-part video series by Jason Greystone, how to really create wealth in trading, some things you cannot live without, the tools you need for success, and of course, the special bonus section, dun, 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 right? Check it out. It's completely free. All you gotta do is enter your first name and your email list. And trust me, you're gonna wanna be on our list anyway, because there is something coming very soon that I can't really tell you about, but if you've been following me for a long period of time, you know exactly what it is. It's a week long, it's free, we do it multiple times, you get more value there from anywhere else on the internet. You know what I'm talking about. So make sure you're on our list anyway, or at least make sure you're subscribed to the channel and you stay in the mix with what we're doing. That way you don't miss it. All right, until next time, plan your trade, trade your plan. I'll see you guys tomorrow with another episode of the Trading Coach Podcast. I'll see you guys Thursday with a Trader Coffee Break. I'll see you guys Friday again with Trader Coach Podcast, and I'll see you over the weekend with another Trading Edge video. Whew, I do a lot.